Hi everyone, this is Joe Gentili from Sarraf Gentile LLP. Um, I want to give a little bit of advice today to people that own universal life insurance policies or index universal life insurance policies. One thing to remember about those policies is it's not a set it and forget it problem. You don't buy the policy, pay the set amount of premium every year, and just assume that the policy is going to stay in force for the rest of your life. That's not the way it works with universal life. Every year, the cost of insurance on a universal life insurance policy increases, whether it's index universal life or universal life, and the premium does not equal the cost of insurance. So the set amount of premium that you have to pay into the policy may be greater than the cost of insurance in early years, and that's what creates a base for cash value. But in later years, the target premium that you have may be less than the cost of insurance. So it's important that you build up enough cash value early in the policy years to throw off enough interest later on to make up for those cost of insurance increases. If you fall behind early in a policy, if you have years where, let's say that your target premium is, I'm just making up a number, $1,000, and that's hinged on your policy getting a 6% return every year. If the policy is getting less than that 6%, then you're setting a pace to have a shortfall later on. And if that's happening, it's much easier to correct that problem earlier now than wait decades to correct it. So the action step that people should take if you have a universal life insurance policy or an index universal life insurance policy is to, on an annual basis or at most every 2 years, request an in-force illustration for your policy. You're going to want to see in real time if the actual performance of the policy is matching what was forecasted when you bought it. When the amount of premium that you were paying every year was set, you want to still see if that's still going to keep you on course to keep that policy in force for life and to meet the different goals that you have with it. A lot of times what people will find, unfortunately, is that if there's a couple of years where the policy didn't credit at the amount you were hoping, you get an in-force illustration, you're going to see a lapse that's occurring earlier than you would have hoped. It'll occur during a period of time which is within a normal person's lifespan and probably after they retire. If you wait until that point to deal with it, it's extremely difficult because the premiums that would be needed to keep that policy in force are going to be very high and increase every year. So it's important to address that early on when you have the benefit of compounding interest. So it's a really important step to do because if you find that problem later on, as many clients I've worked with have, it's a very difficult problem to fix because not only is the premium needed to keep the policy in force high and growing, but it's also at a period of your life when you're least able to deal with it because it happens after retirement age. So if the policy is on pace to lapse decades from now, you want to know that now so you could address it with cash now. So that's my universal life insurance tip for the day. And I think it's an important one, and it's not one that's emphasized in the sales process. So just keep that in mind that universal life insurance policies need to be monitored throughout the course of owning one. If you have any questions, feel free to reach out. And if you're interested in this intersection between law and life insurance or annuities, I really encourage you to subscribe because we're going to be making more videos on this topic. Have a great day. Bye.